Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab? Thanks, Marty. And how we doing in YouTube this morning? Apologies, yesterday I had technical problems here, and we had a complete technical breakdown. So yesterday's stream was about trading secrets finally revealed. And then, of course, that's nonsense. It's about 40 minutes long. If you haven't gotten a chance to see it, it gives you a good overview of market mechanics, what we do in the TraderLab, and how you might find it interesting, and not only interesting, but useful as far as building out processes and understanding the business of trading. Be sure to watch that one. Now, today is FOMC day. And the market has been on a tear. If you've been following the stream, you know we're bullish on the market and looking for new all-time highs, which we have already achieved this morning. Now, it's also probable that we'll get evening up, flattening out, and that those of you should be aware that FOMC day or any kind of key fundamental input creates high risk in the markets for us. And remember, stops or when you participate in the market that might thin out, or even protective stops don't necessarily limit your risk. So always be aware of that. So we're going to talk today about structured trading, continuing our discussion about the trading secrets revealed, which of course is nonsense, and help you see what the reality of the business is and how at times you can get in alignment with it using structured trades. These are available to all of you at no cost in TraderLab, as well as the TraderLab community, which is a group of like-minded traders who come together to leverage their collective experience. So let's see how we can integrate order flow, auction market theory, using a volume profile as a chassis, using structured trades. And the objective I have with starting TraderLab and working with Bookmap is to help traders develop a plan and to navigate the market and to slow traders down so they can become intentional and anticipate trades and not be responding to emotional stimulus, fight and flight, which, by the way, is part of our primal wiring. So if we can accept that we're going to be stimulated and not necessarily operate in our best interests most of the time, because we are overwhelmed by chemicals that are released in the brain, then we have to figure out how to work in an environment that stimulates chemical responses, fight, flight, FOMO, but that's not the way to sustain yourself in the business. So we have to find this balance, if you will, between understanding ourselves, what the negatives are that we bring to the table emotionally and psychologically, and then understand the business we're trying to be in and try to solve for the actual business that we're trying to be in, not trying to solve for getting the business to fit into our psychological and emotional needs. Hope that makes sense. And that's really, you might say, the branch that separates the ability to be sustainable in the business and just passing through. So let's take a look at these processes. Let's see if this makes some sense. And again, past performance is never indicative of future results. You need to come to TraderLab, roll your sleeves up, do the work. Nobody can hand it to you. And you're going to have to do it because it has to align with your psychology and a time frame that aligns with you that you can operate in. Some traders trade very short time frames. To me, it's much harder to do that. Too much stimulation, too many chemicals in your brain. Other traders extend the time frame out, less trades, less risk, more range. Which one do you think over time might have the better probability? Now, you can't answer that unless you have metrics. So that's where the answer lies. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room. This is for educational purposes only. This stream's about structured trades, understanding market mechanics, how the market works, why it does what it does, how you can get in alignment with it. I've shared structured trades that you can reverse engineer. There is no plug and play, which there was, right? Wouldn't we all plug, play, get those guys moved 2 ATMs in the basement? One won't be enough. Well, if you've been doing this for more than 20 minutes, you already know there's fantasy and reality. So let's try to stay grounded here in the reality of trading, okay? Now, I have to remind everybody I'm streaming from Costa Rica. Apologies again if you're visiting in YouTube. I dropped out yesterday, technical problems, and I was not able to get back at all. So hopefully today we'll have a little more luck. And if I do drop out, I do try to restart, and typically I can get back in about 5 minutes. Yesterday, as they say, no bueno. Didn't work. So, but be patient, and thanks again for visiting. And if you're in YouTube, please give a like, and please remember, I cannot see your questions. I'm limited to, I have a dying laptop here, a defective component on the motherboard level, so no external monitors, none of the stuff I typically use. I'm monitoring the Bookmap Discord TraderLab community on a phone. That's fun. So that's where I'm at. Hope you'll forgive me, and I'm doing the best I can. And thanks again for visiting TraderLab. Let's go take a look. I'm going to jump. Oh, graphics a little problematic here. I'm going to go right to Bookmap. Well, no, let's try something different here. This is Investor RT. It's my higher time frame. Let me just. Now, if you guys remember, and I was going over this yesterday, this was Thursday, Friday, and we were in a high volume area. And since we're in a bull market, but maybe, and this was the previous all-time high, this is not excessive. Also, above this day was the previous ETH high. All-time highs typically are not made in the ETH because cash isn't open. I'm going to use the term typically. I'm not going to give you a probability because I don't know. It's just, I'm doing this 47 years. That's just not the way I've ever seen it done, but I've never done any metrics on it. But anything can happen, right? Trading. But let's look. So if this is a weak high, weak ETH, not auctioned in the RTH, so cash is not open. We come back here, and this is Friday. We have buy stops here, and this is something called value area high. Now, if we check, you'll see how this fits. If we check a value area, and now we could always come down here, high volume, think shopping, but value areas where 70% of the volume took place on this day. And you'll notice these are pretty equal, but the key piece of this is we open here, test, and then if we can't come back here, if this, then that. If not, then what? Buy stops, previous retail price here, high volume on this day. If this one's too low, value area too low, come outside. What's this? Previously too high, it becomes a target. Then what? Value area high here. New retail price for this day, open, test value area high, too low, next target, up here, next target, stops here, which is the high of the day yesterday, who knew, next targets, cash all-time, RTH all-time high, and then whatever. So what do we see now? Now, initially, let's remember this area right here, 70.17 value area high. Now, obviously, this is the current market, but we have to start at the beginning. So let's come to Bookmap. Now, guys, if you're in TraderLab or if you're visiting, grab a pen and paper, take a couple of notes. Everything you have to here, you have to vet for yourself, past performance, etc., not indicative of future result. Who knows? Okay. Now, grab your context grid sheets. Let's take a look. This is the RTH, previous all-time high. This is the ETH, previous all-time high. It'd be nice if these levels come back in. I am having technical challenges again. They will come back. So, would be nice if it would show up. Sorry, there you go. Thank you. It's almost like you have to thank it, thanks. Okay. So we are opening RTH open. Let's look here. Yesterday's high is here. The overnight volume point of control is at the previous all-time high. These are important. Let's go a little further. Yesterday's high, yesterday's value area high. So we know there's going to be stops over yesterday's high. We know overnight volume point of control is the retail price from the last auction, which is the ETH. Now there's something else. The retail price from yesterday is called the naked volume point of control. So this is the fair price from yesterday. Now there's one other piece here to make this really interesting. The ETH low is at the highest volume from yesterday. Now you're going to say, well, so what? And value area low. The other side where 70% of the volume was. So what do we know? Retail price from yesterday. This is like in the store shopping. This is the fair price. And the outside edge of value down here. The upside edge of value over here. The retail price over here from the last auction, ETH, yesterday's high. I'm sorry, all-time high. And then we have the ETH all-time high over here and the ETH high. So now grab your pen. So we're going to open. Let's go back to the premise. We're opening over yesterday's high. So higher outside of range. Let's go to our context grid sheet. So we're opening. Hope I got all this right. One moment. I get discombobulated, by the way, when I have technical problems. I'm not a good multitasker. Let me just make sure. Yeah, yesterday's high. Okay, so this is a gap. We're opening higher outside of yesterday's range. So what does it mean? The market is out of balance. Now, what does that mean then? Balance is where 70% of the volume took place in here. So when we open out of balance, the market or participants are saying is maybe that's too low. Now, there's two possibilities, of course. If we open out of balance, then we can just keep going. Oh, that's lovely. But the other part is we can get profit takers. So we open in a gap. We have the market long from yesterday and long from the ETH. The low in the ETH is the fair price from yesterday over here. So we tested this already. Maybe this is too low. If it's too low, then and I'm gapping, I'm over yesterday's high, what might we do? Well, I might get some profit taking, but in the ETH, I already tested this. It's maybe too low. So that puts me on the possibility of some profit taking, but to be looking for longs initially. Now, you're going to say, well, why? Because the language of the market. If I open and this high yesterday might be too low, and I know the outside edge of value and the high volumes below me, this is an area potentially to look for longs. And if that's the case, I have the RTH all-time high over here, and I have this overnight volume point of control. Oh, and you're asking me, well, what's going to happen with all this? I don't know. But let me tell you some things I do know. I have probabilities and statistics, and part of this is the data mining that goes on in TraderLab. At TraderLab, thank you, all of you, for all your contributions, data mining, and support. We're opening higher outside of range. And write these down, but you have to vet them for yourself. Taking out the first hour's high or low, it's called the IB, is about a 98% probability-ish. Taking out the ETH high or low is a 97% probability. Getting to the overnight volume point of control is about an 82% probability. Getting to the previous high or low, a 67% probability. Getting to the previous high, 67% probability. It's there. Getting to the previous value area high or low, about a 54% probability. But now, getting to both, let me see if I can find both. It's about a 20% probability to come here and get down to the other one. But what do we know? See, this is where you need to understand the language of the market. This is the fair price from yesterday. Well, what's the probability of getting there? I'm looking for it. I can't even find it. Wait a minute. I've definitely gone over the deep edge. It's about a 38% probability. It's not a high probability. So why would I think we can come here? We can come here if we find too high, because this is the last auction yesterday outside of the ETH, which is the most recent one, where we had a fair price. And if I fall inside of a value area, this is the next thing. But what else is here? The ETH low. And if I don't get to the ETH high, or low, one of them has either one has a 97% probability. Well, if I don't get to the ETH high, which is there, is it possible that I can then go to the ETH low and this because of the structural meaning of it? And here, value area low, that's another one. So go right through the value area. Is that possible? Now, you may say yes, you may say no, and I'm going to tell you what I know. I don't know. How about that? Anybody ever tell you they don't know? What I do know is, number one, I don't know. Number two, what I do know is how to read the auction and interpret it as it develops in real time. And you can learn that in the TraderLab. The idea, at least for me, as I define it, is there's no prediction. There's only maybe. So maybe it'll do this, maybe it'll do that. What order will it do it in? I don't know. So I have to then have benchmarks or locations of potential behavior. And based on the behavior in those areas, there's nothing rigid in this. There's a lot of slop. Based on those behaviors, I can then attempt to align, put my trade on, take my risk, take my stop, or get my scale, take my stop, or get my scale, get my target, or deploy my trade management process, going for statistical probabilities. And as they say, it's a gaming or gambling term, let the chips fall where they may. That means randomness. So I operate on randomness. I need to be consistent. The market is random. So how do I operate in this? Let's take a look. Based on what I know if I'm opening here in a gap, I can fill the gap. I can come down here. This is the last retail price, but let's look at what we do have. Yesterday's high. And I want to show you this. This set along, this is pre-RTH. I saw this and I looked at this as a long. And I posted this in the TraderLab. Now I don't call trades. And I'm going to say my guess is as good as anybody else's. And you're going to say, why are you guessing? I'm not guessing the trade. I'm guessing the outcome. Isn't there a difference? So for me, I know the trades. I don't know the outcome. So let's get over it. You don't want to hear that. You want certainty. I understand. Me too. Except I kind of have changed my thinking on this. So if I check yesterday's range and I see the buyers here, this is actually a long. Now, the thing about this is the long sets up in here. But we're going into RTH open. So I'm going to start out saying there's no trade. But I did see a long. I want you to see what it looks like. Now let's go to RTH open. Now the open is, as they say, a very difficult place to trade because of speed and volume running through. And it's easy to get whipsawed on the open. So I would suggest to developing traders don't trade the open. Why? Unless you already have experience and you can trade slower rotations. So the way this works here, let's go take a look. 82% probability to go there. Well, if I'm opening there, as they say, that's not much of a reach. Okay. So right here, RTH open. So here is developing volume point of control. This is your developing retail price. At the RTH open, most of the volume is right there. And there's our buyers. Now remember, the possibility is the market is long. We may get, and we're breaking out of yesterday's high and the RTH all-time high. There's going to be buy stops up here. Anybody who's hanging out short, thanks for playing. They get a coupon to the buffet. And then continuation buying. The thing we have to be very aware of is the market is long from the ETH. However, the ETH high is very high above us, and we also have the ETH low here and the retail price, and we're outside of value. So this sets up longs only for me, and I'm only talking about me, I'm not saying you. I always have to say, there's other traders in TraderLab, they're going to be taking shorts, I'll be taking longs. It's not right, wrong. It's time frame. So it's not, remember, this isn't a business, I'm right, you're wrong, you know. And our nature is to kind of like, I'm better than you kind of thing. It's not, doesn't exist in this world. You're only as good as yourself because you're competing against yourself, not against the other traders, though in a way they are part of where we will exchange dollars. The ultimate challenge is not them, it's going to be you. What you do, how you handle yourself, how to manage your emotional state. So this is the retail price. This is now the next retail price. This is micro support. It's right there. Now, if this is too low, we can come here. And if I can get above here, I can rotate higher. Now, in this trade, this is the full session VWAP. Now, I use the full session VWAP, and I'm not saying anybody should. And this is where it was at the time. Right now, it's down. This is real time. But this is where it was at the time. So when I was looking at this long, which is here, and when I was looking at it, and I'm looking at this long actually set up down all the way down here, yesterday's high. So this is my target. If this is a long in my trade plan, then I have to get long. I've got a scale, and then I'm looking for north. But let's watch. So right here is resistance, right here. Got it clear there, and then you're going wherever. So you have micro support, support, resistance, resistance. So this is your support. Now, this is not a trade anybody should take. I'm just showing you structure. If you can read it, you can trade it. If you can't read it, then, you know, let's watch. Support. So you have support, support, support. This is support, 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 resistance, 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 support. This is all micro. Now, right here, here's what needs to happen. Your support is there. Right here, there's your buyers. That's the absorption. And this is your resistance. What this needs to do to continue higher is it's got to cross here. Let's watch the behavior. Now, we're in here about 2 minutes. So these are not trades. These are just mechanics, market mechanics. So what do I know? Well, my open is over here. I also know there's going to be stops under the opening swing. And so I know there's longs on this side, and now I have long liquidation or shorts coming in here. Couldn't tell you, it's not my job. My job is alignment. Breaking here, not getting back here is, as they say, trouble. So for me, if I was long, once I'm under here, and I can't get above there, that this trade might be over. So let's see what it does. Okay, let's look some more. Let's look. Let's look. Let's look at microstructure. You know, I can't cover a lot in the stream. What I want to demonstrate to developing traders is we can't know what it's going to do, but would it be helpful to know where it might do it and why? Where did we come? Where's too high? There. And where is it? There. Right there. Now, that doesn't mean you can predict it, because you can't, and it doesn't have to do anything. But it would be useful to you to know that when this changes here, and we break and we can't get back above that, right there, that's a problem. And would it be helpful if we return to it and we can't get back above it, that there's trouble? Would you, if you could anticipate the reaction, would that give you something that other traders don't have? This is language. So I don't use indicators. What I do is I try to get into a place where I can anticipate behavior or not, but I can't predict it. So if I know this is important, when I come back up here, and here's another little telltale thing. Is this a double bottom? Is that a double bottom right there? Are double bottoms strong or weak structures? This is a weak structure. So if I know these are exhaustive rotations and there's going to be sell stops. So it was ever long from wherever this opening swing low is, which it's not, I can't quite tell, it might be there. This is potentially on the hip parade. So when I can't get through there, break here, then this becomes some resistance. But where's my support? Yesterday's high, value area high. So if I'm looking for longs, I have the first one I can take, and that one could be over. And then I have, where's my next location? Am I in FOMO or am I waiting? Let me show you another long. Now this is very aggressive trading. And we were talking about this in TraderLab. Hold on, I gotta try to get back here. This is very volatile. And I'm not suggesting anybody trade like this or even take these trades. But what I'm suggesting is isolate trades that fit for you in your time frame. Wait for the locations and just wait for them. So this is where it's too high. We break. We have our opening swing low, which I think is right there. Break high. Now this is called VPOC migration. Let's look at the similarities. If this is too high and it's right there, keep that concept in mind. Now I have the opposite behavior here. What are the possibilities? Too high, I'm out of here. Or too low, break high, there's resistance. There's support. There's resistance. Break high, mid VWAP, sweep, support. This sets up a long in TraderLab, and now you're trying to go up and take this out. Because why? There's going to be stops here for the sellers in here. So think of it this way. Buyers here, stops below, sellers here or here, stops above. It's all time frame specific. So what you have is, now when I say short, I want to be very specific about something. I'm not saying go short. For me, and again, I'm only talking about a broad stroke here, not micros, trading, with the scalpel, an electron microscope. Let's say you only want to take longs because what's the context? We're outside of yesterday's range. We're outside of value. Remember the context grid sheet. And all we want to do is be long at the moment. So what do? Well, you take longs. And then what do you do about this? You're managing your trade. What do? Has the context changed? No. Where are we? Outside of yesterday's range, outside of value. What is our context grid sheet? Up. Do you want to fade it? That's your trade plan. Me? Long continuation trades. If I take a long, I get taken out. I go, oh, that was fun. Now what? Is it still a long? Yes, it is. Where do I get long? Here. There's my sweep. Here's support. Here's support. Break high, support. Break high, support, support. Then up here. Now I get a sweep. This sweep is opposite that sweep. I get a sweep here. Going to the moon. Why not? Watch. Now, what happened? Came all the way across the range. This could be a problem. What do you think? I don't know. Where's my stops? They're under here. So what happens here? I get a sweep. What does that suggest? Potential counter rotation. But where's my location? Yesterday's high. I'm still outside of yesterday's range and value area. I'm still only on the longs. I don't have a long. What am I going to do? I don't know what I'm going to do. Let's watch. This actually sets up a trade called mean reversion. Actually, it was right here. I posted this in TraderLab. You know what's so interesting about this? When I come back and look at these things, it doesn't look exactly the same way to me as it did as it was unfolding. It's pretty interesting. There's your sweep. Let's just look at the other side. See the sweep here? That suggests the potential, if I don't get above here, to do this. When I come down, I'm coming under the sell stops, and I have a sweep, and this sets up a trigger right here. Actually, I did post this. I think it was 24, and then you're trying to scale here. This is called mean reversion, and if you can get out, up above here, you can keep going. That's the idea. Notice where it comes. Isn't this interesting? So if you get long here, you've got to get risk neutral. And then this is your resistance up here or up against here because the sellers took control. And you had the sweep. See how this, and then look at the liquidity. So if you're managing your trade, at least the way I tend to do it is, if I'm trading outside in, then I've got to be thinking about this. Because if I can't get above this and back above these, then I can just fall out. And this is really where you got to clear. So scaling, risk neutral, and then helmet on. So far, going up, don't know anything else. Now what? Well, fall down, take these guys out. Now what? Where's my next area? Well, I'm still outside of yesterday's range. So I got yesterday's high, and I got value area high. So these are the areas. So for me, and other traders take shorts, doesn't matter. I'm only looking for longs in this condition. So let's watch. All right, let's go. Let's look at the long. So here's our liquidity. We break here. We're inside yesterday's range. We have to observe this right here for a potential reversion long. It's an important area. Let's see how it behaves. Here's what this is right here. When you break into the range, this is your area to look for a long trigger, right here. And so it was 18. When you break low and you can't get out above this, it sets a short up, and the goal would be to come down here into the ETH low. That's the objective. Let's watch and see what it does. So what this sets a short up. The objective for me would be to go here, ETH low over 98% probability, also to get back here. So, because don't forget, ETH high is way up there. And considering I'm seeing the profit taking, and don't forget it's FOMC, so you might want to get out of Dodge, up to you. So this is a short to there. The buyers come in here. See the change? So here, what would happen is if you took the short here, you get yourself a scale, you get taken out right here. So now, if you get taken out, this is where your support is now. So the next thing I was looking for up here was if we come outside, so the outside is there, which was created by that, which was a short. And then the next one is going to be out here. So if I squeeze up, then I'm going to be looking back in here. come back up to mid. Liquidity comes in the book. The idea of this is still to try to get here. So this one would work for you. Once you come out the IB, we have over 90% probability to take out first hour's high-low. We're inside of yesterday's range. We're inside of value. This sets this up, ETH low, and then we have another target below called the value area low. And we were discussing this in TraderLab. Good discussion. There's about an 80% probability to get here. Again, you have to vet these for yourself. So the shorts are fine. Fine. All this is fine. To here. Data drop, very exciting. Lost data. Costa Rica, thank you so much. Next target, and then you know, whatever after that. I haven't seen any of this, but that's the primary trades I was talking about. Oh, look at this. This also, you can lean against this. Let me explain this to you. And this has some nice alignment here. Let's see. Let's go look at this. And I haven't seen this till just now, so let's come back and look at all this. I have that hole in the data, so I can't do anything with that. Okay, value area low. So you got liquidity in here inside of value. So this is like once you break inside of value and you're inside of yesterday's range, for me, it's shorts. That's all. Nothing more, nothing. I'm not going to try to buy anything. You can, you know, if you have an edge in this. For me, FOMC day, it's January 28th. 2026, why would I be getting long when the market's already long? So now I have long liquidation. That's fine. So what do I want to do? I want to ride the sellers. The sellers are longs and sell stops under the market. So I want to sell. I want to ride with them. The buyers are sellers, and I want to be a seller to align with the long liquidation now. So how do I do that? Well, if this is too high, and I'm inside of range, I'm outside of the first hour's low, the IB, we have a structured trade that sets up at 9:30 Central Time that once you take out the first hour's high or low, and we have structure that suggests lower, which we happen to have here, then it would be shorts. And this is called the IB continuation trade. And I think, yeah, basically, this short is here. I don't know what happened in here, but this is your IB. You could be selling this, get risk neutral. We come back outside, you can be selling this, and you're going for value area low. If we hold value area low, we can keep going. There's nothing that says we won't. I'm not saying we will. Nothing says we won't. Hard with this computer. So we want to watch this out here. You notice it's coming back in. You'll notice it's aligned with the value area low, and this is a low volume area or outside edge. The possibility, and there's always many, is that we can come up in this area and rotate down and continue lower. We have liquidity coming in over here. So we have this outside edge, and you always have to watch with order flow. Do they pull? I always think of order flow in a way kind of like Pac-Man. You know, if the buyers want this and the sellers are here, they're going to gobble up the sellers. If the buyers come up and there's more inventory coming out, more passive sellers, they're going to consume the buyers, and then we can come down here. So we want to watch this. So the inclination here at the moment is, if you're outside of value, you could be what you need to be watching this behavior, or you could just be parked because the primary trade was pretty much down through here. So no trade here at the moment other than here. So there are shorts. This is a resistance. See, they're pulling now. So we want to see the behavior up here. Let's just watch it. Swing here, counter rotation. Buyers are there. Outside is here. So we'll see what it does. So I don't have trades specifically for these. I mean, this has pretty much done its thing in the way, at least the way I operate. I'm not trying to make trades. What I do is I try to align and catch the other side. So if the market is short now, then where's the buyers? It's the shorts in this leg. So depending on time frame, you're really trading across the legs. So when you break down like this, there's buyers built in. If I start squeezing the buyers, stops when I say buyers, then you're going to get that covering. If I run out, and this is an important area, and I can't get above here, I can then come back the other way. And then we know we have this right there, and then we have this. See what it does. How we do it, I hope you guys are doing okay. Appreciate your patience here, streaming from Costa Rica with a wounded laptop. So I cannot see anything in YouTube. In the chat, if you want, you can access the TraderLab community in Discord. There's no cost for it. There's a link in the bottom of YouTube. Just all you got to do is verify your Discord username, and it's open to everyone. TraderLab's a community of traders who've come together to leverage their collective experience. It's about the business of trading. You don't have to be a Bookmap subscriber. You won't be solicited. It's really about leveraging the collective experience of all of these traders. Senior trader has over 50 years. I've got going on 47, and a lot of experience, and so do a lot of other traders in TraderLab. The thing is, it doesn't matter how long you've been trading, what you do, how you do it. What matters is that you have a sincere desire to create sustainability and potentially build a career for yourself in the business. And I can assure you, most likely, you won't do it chasing ideas and the only one thing, the holy grail of trading and the only one thing you need. If you've been doing that, how's that working out for you? Because we've all done it to some extent, I would say. So what we've all done, you can learn from. Why reinvent the wheel? Does that make sense? So if you don't have a trade now, what's your job? Take your trades. And now if you don't have one, your job is not to trade. There's a thing in this business called edge. You have edge at times, and at other times you're going to be in noise. You need to know where the other side is and where they might be trapped. I'm not a breakout trader. We all used to probably do that at some time, maybe. Breakout traders usually are the last ones to the party. And then, so let's say we're trading a breakout, hypothetically, all right? And let's just say, I don't know, it breaks out here. There's your breakout traders. Now, what's happening to them? They're at the end of a rotation. Now, it doesn't mean the market can't go lower, but what are the probabilities that selling the low of the day is that the market will continue lower because now we're breaking out? So let's say you bought yesterday's high a day, and you're holding it still. I mean, what are you doing? What's your time frame? Well, if you're a day trader, you'll notice what happened over here. So you might call this resistance as long as we're inside yesterday's range. So would you be taking longs? Would you be taking shorts? Where would you? Where's the stops right now? They're out here for rotations. They could be back here. This is just now. These are auctions. These are rotations. So the market can come up, come down, and that's like a retail price in here. If this is too low, I can move up to the next one, rotate, find too high, break back to this. I can come up anywhere. So do I have an edge in this that favors me other than just flip a coin? Well, flipping a coin is not going to get you to be a profitable trader. Waiting for trades that favor you will give you a better probability of having a profitable trade. So and there's two personality types that kind of display themselves here between us, traders. Some of us are risk seeking and some of us are risk avoiders. And you're going to say, well, I don't seek risk. Some of us are very fearful, which is part of our primal wiring. And the other parts of us, sometimes and integrated in the same personality type, are risk seeking. In other words, I don't care, I got to have it. And the other part is, I don't want to get eaten by the saber-toothed tiger. And it's this conflict that's built in. And depending on the mood or if it's a full moon or whatever it is, or your last trade was a loser, one part of that persona might be more activated, the fearful one. Or if you just had 2 winning trades, now you feel, and you're not conscious of it, now you feel invincible and you're going to start seeking risk. Or manifestations of that. Those are the elements, I think, that of all the things we have to try to figure out as traders that are going to take you out of the business. You can learn how to trade if you come to TraderLab. I have no doubt about that. That's assuming you do the work and you're patient. Trading is not a video game, and it's not how often you trade. It's which trades do you wait for. And even then, the outcomes are going to be random. But the more patient you are, the less trades you take. But instead of, in certain personality types are going to say, well, look at, I'm making all this money because I'm taking less trades. Is it also possible you're taking less risk? And if you take less risk, that also is an opportunity for profit. And if the rotations you trade are larger with less risk, does that give you more opportunity for reward? Versus more trades, equal risk, does that mean more profitability or less range, less opportunity? Can you answer the question? Because the answer is really a little different for all of us. But I'm going to suggest for developing traders, it's less trades, more anticipation of locations, more intentionality, less impulse, less adrenaline, less dopamine, less fear, less greed. The way you manage these emotions is to be able to look out across the horizon in advance and suspect where the market might go based on statistics and behavior that you've learned to recognize. And then as the market comes to areas, start looking for structures that you have vetted that are triggers. And then where you put the trade on, and then you'll take your stop, or whatever happens based on your plan. And you need to understand you don't have control over the outcome. You only have control up until the moment you push the button, and then it's out of your hands. Does that make sense? So, be patient, have a plan. If you take no trades and you follow your plan, that's a winner. That's the trader I want sitting on the trade desk with me. If you're a gambler playing a video game, you're certainly not going to be on a trade desk with me or any other professional trader. You're going to be in a video game in an arcade. That's okay too. But don't consider yourself someone who's building a business for themselves. Just you're out having a good time. I always think of it, when I kind of visualize trading and then I visualize gambling, if I go to a casino with my friends, we're going for entertainment. We sit down, throw whatever on the table, and we're giving it away for entertainment. And the camaraderie and the cocktails and the ticket to the buffet. That's what we're doing in the casino. When we're doing this, that's not what we're doing here, right? So you need to really look at yourself and ask yourself, what am I doing? Are you here and you're just kind of pushing the button randomly based on impulse and your psychology and your need for approval and to have a win and to be right and for that dopamine? Or are you very intentional? And if you're intentional and you have a plan and not one trade shows up, you're a winner on that day if you take no trades. If you see a trade and you think to yourself, I'm not sure, I'm going to say, yeah, neither are we. Nobody is sure. You can't be sure. So now you've got to look at what not being sure, how it manifests in you, because you can't be sure. So to be a trader, you have to operate in not being sure. So anytime you're overtaken by fear because you're not sure, it means either you don't have a plan that has an edge that you have confidence in, or you're being controlled by your fear. Hide the lunatic who's always there. Now, try to change fear to apprehension, to anxiety of randomness. I kind of look at it, I've gotten, at least for me, and it took a long time, I'm detached. It's almost like a curiosity. It's like, I wonder what it's going to do here. Let me put it on. It looks right. It's doing everything I think it will do where it might. There's my trigger. I wonder what it's going to do. That's about it. That's as deep as it is. And then I'm as clueless as everybody else. And I always like to say I'm clueless. It releases me from needing to be right or even believing I know something I can't know. It's a very important element in an environment that's 100% random 100% of the time. I believe anyone who comes to TraderLab can learn how to trade if they do the work. And it's not about becoming playing a video game with a lot of pushing the button. It's really more intentionality. It's more strategic endeavor. It's where do I have the wind blowing at my back here? And even then I'm going to step on a rake. So I don't know what's going to happen. I'm clueless, but I'm not ignorant. So I accept I don't know, but I also accept that I know from my experience and the work I've done that I'm going to have more winning trades than losing ones. And I am going to have losing trades because I have to. So that's why the fear, I can't get the gains without managing the fear of uncertainty, because the winning trades and the losing trades look exactly the same. The outcome isn't the same, but they look the same. Does that make sense? So pretty much that's it. There's nothing more to this. This is interesting, isn't it? What do we know about this? This is an important area. We break above it here, and now we have this. Now, this is not necessarily actionable, right? We know this is important, and we know that's important. We also know there's stops under here, and we have another naked volume point of control down here. What do we know? Well, I think this is accurate. This is too high. We're inside yesterday's range. This now is too high. We're inside of value, outside of yesterday's value. So we came across the value area, too high. We're now coming down. We have stops under yesterday's low, which is long liquidation, profit taking, and we have this. So this sets up the potential to get these guys out and to come here. That's nice. Always like when it does that. And to come here. None of those are trade recommendations. All we're trying to do is align with the condition of the market, and then we have to wait for locations. this might not be a location for you. Then you don't have a trade. Somebody else may look at this and say, well, if I can't get back above here, it'd be nice if this would come in. Guys, just so you know, I have a failing laptop here in Costa Rica. And just a reminder, if I drop out, I'll try to come back. This thing intermittently just crashes. And it's not a friendly crash and a restart. It's just like, Tom, I'll see you later. I'll send you a postcard. And it's gone. So it's a motherboard. So just so you know, so all the internals here are not working properly. I'm outside of the IB, which keeps me on the short side at this time. There are no longs for me. I'm outside, inside of value, inside of yesterday's range. The reason we were getting long is because we were testing this from when we were coming down early for long trades. Once we fell back in here, it set up short trades to come down to the other side, which was about an 80% probability. And I'm under here. So all of these set shorts up. So there's no longs at the moment, at least in my time frame. You can, trade long. And we're going for this, not a trade recommendation. Now, the thing is, why might we do that? Has something changed? RTH all-time high. ETH new all-time high is way out here. It's quite familiar. Isn't that what happened on this day? Now we're getting, and what happened on this day set up this coming down. Here we have FOMC, new all-time high, new ETH all-time high. What do you get? Well, too high, under here, through the value area, coming out the other side. We can come here, we can even come back there. Not a recommendation. And there's more. We can even come lower, but that's another conversation. It's not my job. My job right now is to be thinking about that and to be thinking about that. So those are the next areas of interest right now. And none of these are trade recommendations. They're just interesting tidbits. So this is an area of interest, 69.90-ish, and then down here. So we'll see how that manifests itself over here. Do you guys tracking? Is this making some sense? So if we're looking at how the auction works, the idea of auction market theory is to understand what the premise or the purpose of the market is. And that's to try to find too high and too low and a fair price. So it rotates on itself in all time frames. So depending on how you slice the market up, even this is a time frame. So we could be trading these rotations as day traders, and we can also be aligning using the shorter time frame rotations inside of other time frames. So when you guys think of time frames, you're thinking what? Monthly, weekly, daily, 15, 30 minute, whatever it is. Well, when you're using order flow in the auction, now you're using volume. And this is not tied to time. It's tied really to participant behavior and volume. So buyers and sellers naturally, but not a clock. Outside of things like RTH, open close, reports, things of that nature. But primarily, it's where do the sellers come in? Where do the buyers get absorbed? This is where it is right here. And is it a coincidence that this is the retail price from yesterday and we come back to it and it's too high? This is what the auction is all about. Locations and levels of behavior. If a price yesterday was fair and we went up and we found too high, and then we come back and get below what was fair, now it becomes too high. Is it possible we might come down and try to find what was too low? And if we get under yesterday's low where the sell stops are, is it possible? If that's too low, we come back to the previous location below it, that was too low. That's how using the auction. You can look at levels, and if you understand the language of the market, it's not going to predict anything. But once you get the lay of the land and the drift, and you can interpret what these levels mean. In other words, what's fair, what's too high, what's too low, and what was fair becomes unfair, then maybe you can get an alignment and develop a process that you can read. I don't use indicators. Not saying you can't, but I found the indicators were a problem because of the conflict. And most of us in our development throw a bunch of indicators against the wall, mix them together, and somehow have a smorgasbord, and that somehow it's going to taste great. Well, not necessarily. Because if you have multiple inputs, what you've done is you've introduced randomness in your inputs in an environment that's random. You need to remove the randomness from what you can control. And that's what you do in the measurements you use or the process you use to participate. And you can't measure anything if it's variable on the input. And the analogy is simple. It's gaming, so blackjack is played the same way. They don't change it. Okay. They don't use 7, 10, 20 cards, depending on which way the wind blows. It's just the same. And the gamblers are random, how they interact and play, and the cards coming out of the deck are random. So what's not random? How the dealer deals the cards or the games they play. They only get the dollars extracted from the gamblers by playing the game the same way. So we're the same. We have setups, and I call them structured trades, and we need to do them exactly the same way. And we're going to have our winners and losers. But if we have an edge and we have the discipline to just wait for the trades that have edge and forget the rest of it and just leave it to somebody else, that's how you extract over time. That's the business. May not be what you wanted, but that is it. That's the business. So just wait for your trade. Know where it might show up. We know there might be a behavior here. We also know we could come out up here. Do you know which one? I'm going to tell you, I don't know. But I do know that if I come to a location, I had sellers here. There they are. The last time I had buyers was there. If you look to the right, you can see we came back up to the area. No precision, but this is what I know. This was yesterday's fair price. When I'm under it, if it's now too high and I can't get above it, that gives me information. Now, I don't have to necessarily do anything with that information because it may not be a trade for me. Or if I know this was important and I get below it, well, that might mean something, right? If I can't get back up in here, does that say get long at any place here? Is there any long trade? I have no long trade. Not saying you can't. See, the thing is, I don't judge what anybody does. It's not my business. But I can tell a couple of things. One is, there's no reason to get long currently until it changes. So if I know that longs are off the table, then what am I going to do? Either I have no trade or I'm taking short continuation trades. That's it. And I'm going to take my stops, and with everybody else, if I get out of alignment, I'm going to get risk neutral, take a stop, or I'm going to have a trade that keeps going. That's it. You can too. That's all there is to this. Wait a minute. Is this correct? The VPOC, current VPOC is at 1150? Thank you, guys. See if we can straighten that out. So if it's 1150, well, that's interesting. So the VPOC is under the IB. Well, that's even more negative. I had data go down here, among other things, so I'm not sure. This, though, should catch up. This should move down eventually. Well, if the VPOC is under the IB, that's actually more negative. That's even more supportive of the downside at the moment. Thanks, guys, on the 11.5. Yeah, Pablo, stop to the tick at the previous value area low. Well, let's see. Yeah, you could get nailed there. Yeah, but if you followed your plan, then just you have to move on. By the way, when you look left, if you're taking this out here, let's just take a look at this. Yeah, I could see you taking this trade. But you got to be looking over here. This is where the sellers were, here and here. Yeah, you would have got stopped. I'd get stopped too. Oh, that was a good work. Just didn't work out. The thing about getting short over here, it's really, I could see where you would be looking at this. But you got these, that's not a bad trade. It just didn't work, Pablo. So yeah, first, we're going to rename you to Darth Vader. Guys, in trading, what's so interesting always is that you can trade from either side and it doesn't matter. But depending where you are in your development, I've always suggested that that developing traders kind of put a stake in the ground and try to align with what's perceived to be the advancing side. And that, of course, can change subject to time frame. But I think at the moment, we might agree the advancing side is the sellers and it's long liquidation. So longs are liquidating and the shorts have the advantage at the moment. So isn't Darth Favor, it's Darth Fader. Kind of a joke. There's just some traders that always fade. They have a nature for fading. So it's kind of a joke. The reality of trading is you can trade it from either side, but you do need to know the difference between what is a counter trend trade subject to and again, time frame, because in a high time frame, is the trend up or down? Well, the trend is up in a higher time frame. In the intraday developing time frame, is the trend up or down? Well, it's down. How do you reconcile that? Well, it's your time frame is how you need to reconcile it. If we're in a bull market so far, we just made a new all-time high. What's the trend? Well, does that mean you keep buying all the way down, or are you short as a day trader because of long liquidation in a higher time frame? You see what I mean? How do you sort that out? Well, that's what you need to understand. And if you feel all this conflict, which is normal, by the way, then you have to separate and understand how a vertical integration of timeframes might behave. The failure, actually, yeah, the failure of the open is one piece, but when we fell back inside, and especially, and if you waited, a good question, where did you want to get short? Well, the last longs were against yesterday's high and the value area high. As long as we're outside of that area, we were still out of balance and the longs were still appropriate. And then once it started falling apart, it's not, the idea, at least as I try to share here, is not to try to pick the high of anything when it's out of balance to the upside. It's to let it start failing and then look for trades in the opposite direction. Once it fell back inside of the range and value, then you got to be thinking about the longs that came in early, and we had longs also, and now the longs that are in here from yesterday and the ETH. Now you have all those longs in here. That gives you the fuel for the market to go down and do what it's doing now. So for me, you never had to be looking for a short other than trade management. So longs with trade management, which would ultimately you would scratch or take stop depending when you're doing your thing. There was that long to the overnight VPOC. So we had that. In other words, there was all kinds of longs early on. Then when it started falling apart, it became neutral and then it became short. Once it became short, it was back inside yesterday's range. Then we're going from value area high to value area low to naked VPOC, the ETH low. All of that was to there and to here, value area low. Once we're under here, if we can then get under here and we have further targets down below or not, doesn't need to do anything. We can stay inside of here, but right now, where's the fuel? Under here. And then it's here and whatever it does. FOMC, put a helmet on, who knows, right? But Dota, I think to answer your question, that's how I would define it in a broad stroke. Slow down for everybody. Slow down. You don't have to pick the high. That's not a good recipe for developing traders. Let somebody else pick the high because nobody's going to pick the high. You may remember reversals start out as counter rotations. Nobody knows anything. We can always suspect something, but we have to see structures start to fail before we have more input and more information. So trade starting out, at least the way I think is a good way to do it, is you trade with the dominant side, and reversals are used for trade management, not reversals. So you stay with one side primarily. You need to be able to define change. Now, a counter rotation is all it is if the trend is still up. A reversal is going to be when that trend fails. But what is the difference between a counter rotation and a change in trend? They're not the same. So initially, if we're trading the long side, when we get the counter rotation, that's trade management based on your plan. It may turn into a reversal, but it will not turn into a short at that specific location until you can successfully manage yourself and your trade. That's aligned with the dominant side, because the change in trend takes more time to recognize as opposed to a counter rotation. So they're two separate things. So if you're trading in alignment, you wouldn't be picking the top of anything. But when we get into yesterday's range and the value area, then the condition has changed, and then you'd be working the shorts. You see? And all these are shorts looking to come down. Wherever it goes, and then it's trade management. So I don't know if that answers your question. I don't know. Are you hearing monkeys in the background down below? I don't know. I don't hear the monkeys right now. There are a lot of these parrots and macaws, and Yesterday, we had horses walking down the street here. You know how dogs walk down, go down the street and run around? We get horses running around down here. Pretty weird. Just a little different. Yeah, you're hearing the parrots and things, It's going to be in the 90s again here today. It's very hot. This is making some sense, guys. Can you kind of get the idea of why uh, when you're looking to build a business, it isn't coming in to go to the arcade, that it's very intentional, and that you have to define the condition of the market and know where it changes? I think you're hearing the bird, right? And then once you can define those changes, then it's just waiting for your trades that you already know where they might show up. And then either it comes to your location, you put the trade on and put your risk on, and whatever happens, happens. And then you just go on. Ty, you didn't take any trades. If that's your plan, congratulations. That'll give you the ability to sustain yourself and develop it potentially into a profitable trader. But you need to differentiate between fear and not taking trades that you know are your trades. Or if none of them qualified, then that you had a very successful day. If you didn't take trades because of quote uncertainty, there is no certainty. So that can't be the reason not to take a trade. We can't be certain. So that part doesn't exist. So you will never be certain. So you gotta, if that's the case, and I don't mean just you, I mean all of us, if we can't work past being uncertain, then we will not be able to trade. We have to understand it's always uncertain. So now when you feel, you, the collective you, us, when we feel uncertainty and that wave of emotion comes, instead of pushing back, it has to be like a wave in the ocean. It just rolls over you. You understand where it's coming from. The uncertainty, the wave of doubt, the wave of fear is about the predator, the apex predator. Are you going to get consumed? Are you going to be dinner tonight? For some animal. And that's your fear. And that's how you experience this. You experience this uncertainty right here at this moment as the apex predator because it's unknown. So you're wired to avoid it. And so you're going to look for certainty. It doesn't exist. How can you get certainty here versus there or versus there? Which one is certain? Well, neither are certain. So where's the certainty? You can't have it. So when we're fearful, we have to find ways to manage fear. First of all, we got to acknowledge we're always going to be fearful. So take that off the table. Now it's understanding fear. Now, what are the things that you can do to manage fear? Again, all of us, not you, Ty. We got to know that we have an edge that favors us when we come to a location or a trade we've vetted. In other words, you got to know this trade. You got to know that this, now here's VPOC migration. Is this correct? Is the VPOC now over here, or is this still out of whack? Snowing in Madrid, Pablo? I enjoyed Madrid. I was over there, I don't know, 2 years ago. And Barcelona, I spent some time in Barcelona too. And I even like the hours for trading. It was pretty nice. Costa Rica is Central Time, same as Chicago. Not yet, huh? 11 half? Wow. Things are really kind of messed up here. Sorry, guys, about these levels being off. I had a big data hole here, and I can't get the data back in Bookmap when I lose internet here, which I did. Fortunately, it didn't lose power. Never know. One thing about being on the edge of the jungle, and believe me, this is the edge of the jungle, not only do you not know what you're going to get, technically, came across a snake outside, and one of the people here at the villa, there's a bunch of villas here, and and cleaning people, who come in and take care of stuff. So just mentioned to one of them, gee, there's a snake over by the pool. It's about 5 foot long, So no big deal. She comes out with a machete, whacks the head off of the snake, goes back in. It's like, gee, I've met a few snakes in my time, but that's not the kind of snake I want to run into. So how we doing, guys? Any questions here? I've got a couple more minutes. Appreciate your patience. Hopefully I'll be able to get things more under control. I'm going back to Chicago over the weekend, hopefully. Back into the freezer. So going from 90 degrees down to maybe, I don't know, when we get back there, it's going to be 10, 15 degrees maybe or something. That's what's called a rude awakening. Yeah, JJ, that's it. By the way, in the TraderLab, we have JJ Marks. Thanks, JJ, for participating. I always get this wrong, JJ, so forgive me. He was a psychologist, I think, for 20 or 40 years. And so he kind of keeps the virtual couch open for all TraderLab participants. Right. Thanks, JJ. And by the way, to everybody in TraderLab, I want to give you a big thank you for your patience and all your support while I've been here these past couple of months in Costa Rica with all the challenges. It's been more challenging than I could ever imagine with these technological failures, with the laptop barely limping by. My laptop setup, you guys have seen photos of it, is really pretty nice with all the multiple portable monitors and all. At this point, it's barely percolating. So hopefully that'll get resolved. So if you're following in YouTube, guys, I want to remind you that TraderLab is a community of traders who've come together to leverage their collective experience. It's quite a large community. The idea of the TraderLab was that traders can come together, kind of share their ideas, learn from other traders. One of the things that we don't have that is not unlimited for any of us, is assets or time. And most retail traders, with the failure rate is so high, because everyone thinks they're going to find whatever it is, the holy grail of trading or the secret sauce. And I always want to say there's no secret sauce. There's no holy grail. There's nothing new on the horizon. It's all been here. It's all in front of you. The problem is that everything works randomly. So we think that it's just a matter of putting more pieces together to create more certainty, squeeze the risk out, right? So we can manage our psychological fear, our emotional fear, our fear of loss. So we're going to continually go on the quest. And because we have random winners, we actually think we have a winning process when we absolutely don't. In fact, just because we have random winners is still a recipe for going out of business for over 90% of the traders who tried to do this. So maybe you can save some time by being in a professional environment that is focused on building sustainability and getting through the learning curve. There's a very steep learning curve in this business. And unfortunately, many traders just do derivatives of failing processes. They don't fix the process. They just change the effective process and expect a different outcome. If your process is defective, you're still going to have winning trades and you're still going to go out of business. That much I can promise you. So do you know whether you have a viable process and plan that can create a career path for you, or are you only experiencing randomness with random inputs and you're on your way out of business in spite of the random winning trades? Are you leaking equity or are you accumulating it? That's the answer. You ask yourself the question, you look at it and be real with yourself. It isn't just another vendor or another guru or another educator. It's not any of that. I'm not saying TraderLab's right for you. Probably isn't. TraderLab's a professional community. It's not romper room. And you are going to be required to change what you believe and to adapt to this business. This is the hard part. This is like being on an alien, on another planet, an alien environment. And somehow we have to learn to live in this environment, not try to adapt this environment to our Earth environment. We have to change, not mold what we do to the environment we're comfortable with. We have to learn to be uncomfortable, and we have to learn how to function in this alien environment. If you're interested in that, and you have an open invitation, you always will, as long as I'm still doing this, to come visit the TraderLab community. There's a link in the bottom of YouTube. You can use it. There's no cost for it. There's also a lot of additional education, no matter what you're into, large cap, small cap stocks, order flow, with a high tier tool like Bookmap, market maker behavior, algorithmic behavior, icebergs, liquidity, everything. All of it is available to you. You can learn a lot. So it's all there. You can use the link. And by the way, again, apologies if you're in YouTube. I can't see any of your questions because I only have one monitor working on my laptop. Everything else is kind of, as they say, gone to Twinkie land. And I'll be fortunate if I can get out of Costa Rica in one piece, technically anyway. Right now, there's brush fires burning next to the runway and at the airport. So the smoke has grounded and slowed down the planes. Just a little bit of the excitement. It is the dry season here. So it is kind of interesting. I am on the edge of the jungle, so it's a bit humid, needless to say, and but it's beautiful. So I appreciate you guys. Thanks again. Please give a like on your way out. If you're visiting in YouTube, don't forget to use the link down there. Visit the TraderLab community. Say hi. There's a library of webinars as well as the document section. You're all welcome to visit. It looks something like this. A lot of charts, a lot of posts, mutual support, exchange of ideas. It's all going on right here. You can see it's very active. And there's a library of webinars. Thanks for all of you who post. It's always appreciated, and supporting each other. This is the library of webinars. Start with this one. The primer webinar has about 36,000 views. You might want to see why. Trading action plan. Do you have a plan? Separating pros from gamblers. You might want to look at that one. Day trading, fantasy versus reality. Stop gambling, start winning. Trading multiple time frames. How do you integrate these things? Bookmap, order flow, and volume profile wins. How do you put these things together? Understanding squeezes, plan, using microstructures. A lot of things you see me do here. They're all in the library and the document section. Ned, thanks for keeping an eye on this and curating this. Everybody ought to give Ned a real round of applause and thanks for doing this. There's 60 PDFs of structured trades. Can't show them to you, but you've seen them before. You can download those. You do have to vet everything. Also, a lot of you ask me for real-time narration. There are streams here in the library up to 4.5 hours long of real-time narration, a lot of them. You can go back and watch those and see how this all unfolds in real time. Don't forget to leave a like if you're visiting in YouTube. Use the link down there. Visit TraderLab if you're inclined. It's available to all of you. And I appreciate you visiting the TraderLab. Thanks again, everybody. Thanks for visiting the lab today. Again, apologies for yesterday dropping out. It was, unfortunately, beyond my control. Must have been the monkeys. I always blame them. It was the monkeys. Once again. Thanks for visiting me here in Costa Rica. Look forward to seeing you tomorrow. Thanks again for visiting TraderLab. Thanks for your time and interest. See you soon.